Hey, good afternoon, everyone. This is Mark from Right Line Trading, and I really appreciate you're giving me your time. I'm just going to hold for 30 more seconds because there's still a lot of traders coming into the room. So we'll just hold 30 seconds. Okay, well, we're going to start. And again, I do appreciate you giving me your time. Now, what I'm going to be talking about is our Forex money flow tracker. It's quite a different system than anything that we have ever offered before. And if you stay to the end, you're going to see what we're going to offer you a whole bunch of different bonuses. Now, I want to start off by reading that all signals and trading opportunities, whether orally, written, or electronically, that are disclosed to visitors, subscribers for education and demonstration purposes only. The company doesn't take responsibility for any profits or losses that may be incurred. Hopefully, you're going to incur lots of profits. Participating in trading in the markets is risky, and it should be understood that a person can lose a substantial amount of money. Therefore, trading may not be appropriate for everybody. Always carefully consider your financial position, and those of us here at Right Line are not registered financial advisors, and we are not licensed commodity trading advisors. Now, with that said, I do wanted to give you a little bit of a snapshot of my resume and sort of distance myself from a lot of the people on social media right now. These people were not present 10 years ago when I started Right Line Trading. But they're all offering you all sorts of gimmicks and get rich quick schemes, no fail schemes, and they come and they go. Programs appear, disappear. They're popular, then they fall out of favor and they just vanish. And there's 15 guys that are continually pouring them out. And the one thing that none of them have is any formal training. They all just decided to start a company, and now they're training gurus. They made millions of dollars. They're going to offer their software to you. And I really wanted to distinguish myself from them. I graduated from an Ivy League university. I went to the University of Pennsylvania for 8 years. I majored in mathematics, and during my time there, I focused on mathematical modeling. I worked with the U.S. Navy on optimizing underwater decompression schedules that had never been done before via computer. I don't want to date myself, but back in those days, there weren't very many computers in the world, and there were no operating systems. They ran on punch cards. They were very difficult to use. The Navy had a lot of trouble bringing up divers from very deep depths because decompression is very dangerous and very difficult to do. And we really helped them out for the work I did with them. Through my mentor. I was awarded my diploma with special distinction, and I did graduate summa cum laude. I was inducted into the Phi Beta Kappa Honor Society. After I finished my training there, I became a full-time professor at Thomas Jefferson University in Philadelphia. I published 15 peer-reviewed articles in top-tier journals. I taught, I don't know, thousands of graduate and undergraduate students, and I still consider myself to be, first and foremost, to be a scientist, a teacher, and an academician. I've mentored more than 30,000 traders, and I've spoken internationally. Last place was in the Philippines. I was invited to a large speakers group in Manila, and that was in late March, early April of last year now, which was right before the COVID epidemic hit, and also Dallas, Fort Worth right before the COVID epidemic hit. Now I'm not traveling anywhere for the time being. Although my son has decided he's going to go to Colorado and go skiing. Now, if you're here today, it's probably because you have a problem, and maybe you're making money, but you think you can make better money. But the most likely thing is that you can't create consistency. That is really sort of like a magic word. You have good days, you make money, and they're followed up by bad days. And what you can't do is develop the traction you need to just continually increase your trading account and to grow it because of those bad days that set you back. Now, you may have blown one to several trading accounts. You may have purchased expensive software in the past that, despite promises, does not work. I mean, those kinds of things leave you financially scarred, and I think emotionally scarred. I bought $15,000 software in 2004. I blew an enormous account. Every time I called and complained about what was going on, they always blamed me for the problem. And that's really when I decided that the only way to develop a really precise software suite was to do it on my own. Now, really, it was only my study in applied mathematics that allowed me to create the software I'm going to show you. And I really started working on it in late 2011, 2012. And one of the core principles of mathematical modeling is that you're never done. You're always in transition. You're always trying to make your software better. And so over the course of the last 10 years, we've never had a static workspace. No matter how good we get, we are always looking to get better. It's like the best violin player in the world. You cannot get good enough. And it's a software and it's a trade methodology that you have never seen in the past. That I don't think you've ever been exposed to in the past. Now, what I refer to about the best violin player is that guy probably practices 20 hours a week. He was already the best violin player in the world. Why is he practicing? That's because you never get too good. Now, I have 500 traders in my live trading room. I am in there every morning, in the trenches with them. We trade shoulder to shoulder, and we try to be successful almost every day. Unfortunately, we can't trade with 100% accuracy, and every now and then we take a losing day, but we have real good consistency, and the vast majority of my traders are extremely successful. Now, if you stay to the end of this 50-minute presentation, it's going to be a little bit longer because I want to make it educational. I want you to learn something from it and be able to take something away from it. Just don't want to throw software at you and say, here's a green line, here's a red line. I want you to understand it. I don't want it to be a black box system. And I want you to understand a little bit about how we got where we got, so that, because I think I'm going to give you some pretty good trading pearls that are going to help you trade no matter what you do. But if you do stay to the end, you're going to get some really, really powerful bonus software, a very, very big special discount, and a special way of making the payments, and also a special super secret bonus. It's not that special and it's not that secret, but it's a nice bonus. Now, if we go back 400 years to when the Japanese rice traders created Japanese candlestick patterns, we have to look at the type of market that they were examining. And what they were looking at, let's say, and remember, if you have 100 buyers, if there's 100 kilos of rice, you have 100 buyers on one side and 100 sellers on the other. That's exactly like the stock market. It's a bartering system. Some people are trying to buy the rice and others trying to sell it. And so the bartering goes back and forth, just like we do over, say, a share of stock or a currency pair. Traders trying to buy it, traders trying to sell it. Now, they made an assumption that if there were 100 buyers on one side of the rice and 100 sellers on the other, every single participant in the transaction had equal power. So what we were dealing with back then, and I'm sure this was true 400 years ago, was simply in the aggregate, a bunch of buyers and sellers that all had equal power, i.e. equal throw weight. No single buyer or seller had the ability to determine what direction the rice was going to go. And in that environment, they created Japanese candlestick patterns. Now, it's a very elegant assessment of whether at any given moment the bulls or bears are in control of the market, all based on the premise that there's no single buyer or seller that has this enormous amount of throw weight that can tilt the market in one direction or the other. This is just small traders like us bartering back and forth, determining the direction that the rice is going to go. And back 400 years ago, this really was probably extremely accurate. I think it's worthwhile reading Steve Nissen's books and understanding how these work. It gives you a little bit of insight into how market movement and price mechanics works. But essentially, this is not effective anymore. It's constantly being offered to you and sold to you to trade off the right edge of a chart, as if it has tremendous predictive power. The problem is it just does not. And the reason is that the market has changed so significantly in the course of the last 100 years. And what we have now is we have the small retail traders, just like before, all with equal power, pushing and pulling against each other. But now we have this huge guy here, this institutional trader. Now, who were the institutional traders? I think at this point, most people know that. It's a 401k, it's a mutual fund, it's a hedge fund, it's a big bank, Deutsche Bank, HSBC, Bank of America, it's JP Morgan, it's Goldman Sachs. It's any institution that's able to leverage an enormous amount of money. And when they do, they make the sentiment of us as small retail traders absolutely irrelevant. If we're pushing and pulling back and forth, now you and I are never going to be doing that again, and I don't do that anymore at my trader's zone. But if we were, and this big guy stepped in, they're going to take the market in the direction they want it to go, and our sentiment as small retail traders is rendered absolutely irrelevant, absolutely moot. And if we happen to be caught in the counter trend direction, we're just going to get body slammed and get stopped out. So what our job is in the current day's market, in every Forex pair, is to trade in the direction of big money. Now, this is just an example, and this could be priced in any market, on any Forex market. When the small retail traders are simply in the market alone, and we are alone in the market for a large percentage of the time, we just create chop. We do not have the power to create an extended trend of any significance. And the most important thing to remember is that our goal as small retail traders, and I always ask this in my trading room, what is the number one goal of us as the small retail trader who is day trading or swing trading? Inevitably, everybody always says, well, it's to get winners. And that's the wrong answer. Our goal is to avoid losers. Mathematically, one is trading with sensitivity, the desire to get into every winner, which is what most day and swing traders do, which is why they all go broke. or trade with specificity, the desire to sidestep every loser, which is what almost no day traders and swing traders do. If you do that, the winners will fall in your lap. They will come to you. You won't chase them. And when big institutional money walks into the market, we will take the pair long if they push it up, take it short if they push it down. And if we try to counter trend trade big money, we're just going to get run over. And that's what really the big institutions love to do, because every time they run us over, we help propel the trade in the direction that they want it to go. So running us over happens to be a very lucrative thing for them to do, and they watch what we do. So if you think that no one's watching you, you're wrong. Big institutional traders really set us up, and I'm going to show you in a minute. That's why they create bull traps and bear traps, and we're not going to get caught in those anymore. Now, just really quickly, I want to talk about pattern trading. I gave it as an example, a falling triangle to represent every pattern out there. A falling triangle, a rising triangle, a channel, a J-hook, and all these other patented special patterns that are supposed to have tremendous power. Now, a pattern is just a more elegant representation of the sentiment of small retail traders like us. Institutional traders do not create falling and rising triangles. They just zap the market in the direction they want it to go. We create these sequential lower highs with the anticipation of a bearish trend continuation. Now, the goal of software is to define the risk associated with a trading entry. That's why there's going to be some discretionary component in your entry, although we've really removed almost all the discretionary components of trading. There's still going to be some discretion, if minimal. Now, here there is no discretion, and there's no assessment of risk. You have to make the assumption that every falling triangle pattern that breaks out of support is going to continue to the downside. That's one of the reasons why this couldn't possibly work. So that means you're going to have to make the assumption that every falling triangle pattern has equal power, and you're going to take every falling triangle breakout. And that's why 95 to 98% of day and swing traders go broke. Here's what happens. Now, here's the falling triangle. I should have let price break out. Well, what happens is when the institutional traders see a whole bunch of retail traders like us, and remember, we're not small in number. There's tens of thousands of small retail traders located across the world. And when they see us all going short, that's when they're most likely to go long, because they can catch an enormous number of us in the wrong direction. And by pushing price long while we're going short, they create more power in the move, because we have to buy back our lots to cover our positions as price moves up. So they watch what we do, and we have to be very careful not to trade against this force ever. Now, just really briefly on Fibonacci retracements and extensions. Fibonacci was a 13th century, and I want to make it a little academic, and that's why I'm bringing this up. I could skip this whole prelude, but I want to give you a little bit of insight into the way the markets move, and why they go long or go short. Just not make this a flat on here's our software type of webinar. Now, Fibonacci was a 13th century mathematician. He created Fibonacci transformations. From those, we got Fibonacci numbers. And then some wise guy who won't stand up and take credit for it in history decided to move Fibonacci retracements and extensions into the stock market. Forex market, futures market, and decided that somehow that was going to adequately represent buyer sentiment, that when price rose to a Fibonacci level, that level would act as an area of resistance. If it broke, it would then become an area of support. Now, if this is an area of resistance, it has to magically acquire sellers. So if price rises to it, the sellers are going to push it down. And when it breaks, it magically becomes an area of support. Now, arguing over whether this worked 200 years ago or 75 years ago or 80 years ago is irrelevant at this point. Big institutional money couldn't care less about these levels. They're going to run them. We've done a year's worth of market replay data on them. They arbitrarily hold or break. They have no predictive value whatsoever off the right edge of the chart. And if you use them to trade, they're going to walk you into losers and prevent you from taking winners. And I believe of any single analysis, this one's cost more traders more money than anything else. And when these phony gurus on the internet want to build a software program and sell it to you, they always sort of pull in Fibonacci because it remains very attractive for some reason to us as small retail traders. We give it power, and it's magical power, because on a mathematical level, there's actually zero reason that this should be effective. And again, institutional money doesn't respect it, so we don't give a hoot about it anymore, and we don't look at it. And you shouldn't look at it either. Now, to sum it up, we can't trade price action or price patterns. We know why. We can't trade Fibonacci. We know why. Elliott and Gann, two very, very brilliant mathematicians who created formulas to try to describe market movement or trader sentiment. Maybe they worked 75 or 80 years ago. In today's market, that 5-wave pattern, Gann theory, who created areas of support and resistance off of a much more complex series of mathematical equations. Big institutional money couldn't care less about them. And then finally, divergence signals. And again, there's tons of software out there trying to teach you how to trade a top or a bottom. And on a mathematical basis, that is impossible to determine. You cannot determine a top or a bottom. A divergence signal may work sometimes and fail others. And remember, our goal is to avoid losers. And if you take divergent signals and it's part of your trading methodology, then you're going to have to take them all. And an enormous number of them will fail. The reason is that tops and bottoms are created by big institutional money, and we can never know when they're truly going to step aside. And at tops and bottoms is when they create the formal bear traps and bull traps. So they'll take, say, a financial instrument long, maybe the euro yen. It'll go up and up and up in price. Then they step aside for a second, and they let the small retail traders like us try to push the price of the currency pair back to mean. So a lot of small retail traders hop on board short to try to catch that snap back to mean price. Now that mean we define as a 50 exponential, and I believe there's really solid evidence as to why it should be a 50. But what happens is then they step right back in, and they run over all of those short traders. And that's the classic bear trap, because they're not done with this financial instrument. They're going to take it longer. You cannot top trade or bottom trade. All you can do is trade the trend that the big institutions create. And when they step aside, we step aside and let the small retail trader trade that drift back to mean price, if it even drifts back. If institutional traders, like I said, don't come and push it up even further. We stay away from them, and hopefully your top calling and bottom calling days are over if you've been doing it. Now, institutional money comprises 70% of all volume in every currency market. They control the direction of price. And I'm being a little bit redundant, but I mean, I think it's really worth repeating. When that hand comes down and they pull and they walk that and they pull that candle up, price is rising. When they push this candle down, price is falling. All the other things we look at are absolutely, totally, and completely irrelevant. And if we use them to trade, that big hand is going to run us over, and it's going to destroy our trading account. And the money in our account is precious. Our number one goal is capital preservation. At the very least, don't lose anything. And then look to start exponentially, first arithmetically, and then exponentially growing the size of your trading account. Now, big money rotates where they're going to invest in the course of a given day. And it's called sector rotation, and I think everyone's heard of it before. So when risk is on, they're going to mostly buy stocks. They're going to buy the Dow, Russell, NASDAQ, and E-mini. Now, when risk is off, they're going to move to currency pairs, and they're going to move to precious metals. They're going to move to treasury bonds and treasury notes. Their biggest return is normally off of stocks, but as the way things are going now, a lot of big money, even when risk is off or risk is on, excuse me, still move into the Forex markets, because volume there is enormous. Everyone knows it trades around the clock. But what we do is we track this sector rotation utilizing our proprietary technology. We know where money is coming from, and we know where money is going to. And that's the key to trading successfully. Now, here's the Forex money flow tracker. It's a lot more complex than this slide, and I'm going to go through it. Now, there are three key metrics that determine money flow. Now, big institutions are not going to tell us when they're going to buy or sell a currency pair. I mean, we have to use proxies. There's no such thing as a money flow indicator, because that somehow that creates the illusion that we have some window into the actual flow or directional flow of money, and we don't. All we can do is look at proxies, which taken in total pretty much give us a tremendously powerful understanding of what the institutions are doing and where they're putting their money. One is this triple screen assessment of correlative markets, and no currency pair moves in isolation. There is a neural net, and every currency pair is correlated with every other currency pair, some very tightly, some very weakly. We leverage this information to help us trade. Just excuse me 1 second. Okay, I'm sorry. Now, we also look at the triple screen assessment of Youre momentum, which you're going to see is an extremely powerful assessment. And then we look at order flow. And I'm going to show you order flow first. Now, I do want to go over our method of data analysis. Now, this is the way we look, this is the way we create our indicator analysis. And it's different than anybody else, because I have never seen this ever being proffered to me. And I listen to everybody else's webinars. When I'm sitting here in the early evening and I work, I always have a webinar going on one of my screens because it lets me know what other traders. Sometimes I really get good information. Most of the time I don't, but I want you to understand that if any indicator assesses data off your trading chart, it will have no future predictive value whatsoever. So if you have a bunch of indicators underneath price, which are supposedly going to tell you how price is going to move off the right edge of the chart, they're not going to do it. They're not going to be able to provide you with future predictive power. And that's all we care about. We don't care what price has done. We care what price is going to do. So we just take all the data from the trading chart, and really there are only 5 pieces of data. There's the high, the low, the open, and the close of each formation. That's 4 pieces of data. And the 5th is volume. Now, volume can be assessed very elegantly, but that's it. There's only those 5 pieces of data. And we ignore them. And we go to the 2 higher screens, we call them. So let's say you're trading a 2-minute. We're going to take the 2-minute, multiply it by 3 to get the 6. The 6 multiply it by 3 to get the 18. And all of our indicators will be using the 6-minute and the 18-minute to tell us what price is going to do on our 2-minute. If we're trading a 377 tick, we do use Fibonacci because Fibonacci has tremendous symmetry in nature, although it has no power in predicting market sentiment. So if you're trading a 377 tick, we're going to look at the 610 and the 987, the 2 higher fibs. If you're not trading a fib number, the system will default to the closest fib and then take the 2 higher fibs. The same thing with range and Renko. If you're not trading a range or Renko fib number, default and move to the higher. Now, we don't use Unirenko in Forex. So let's look at the triple screen assessment of order flow. Now, it's a really powerful force that moves price. And a lot of people think you cannot use order flow in the Forex markets because there's no centralized clearinghouse that essentially tells you what's going on in the market. But there's a dome. And on that dome, there are buyers and sellers sitting. And without that dome, you wouldn't know what the pip spread was. You wouldn't know what the price of the currency pair was. So you have to have a trading dome. And on that trading dome, these aren't executed trades. These are simply buyers and sellers sitting at each pip value. And what the market delta number is it tells you whether there's an overabundance of buyers or an overabundance of sellers, i.e. if you add up all the traders just sitting at the bid and sitting at the ask, I'd come up with a number. Here's 1812 up close, buying pressure, overabundance of buyers. 2985 up close, overabundance of buyers. Here's a positive 222 down close. Even though there's an overabundance of buyers, the candle closed to the downside. And that brings up the 2 inherent flaws of order flow, which really nobody has dealt with or overcome. This indicator I bought from another trading platform. That trading platform is no longer around. This indicator, as far as I know, is no longer being sold, but it was sold to, I mean, tens of thousands of people. Now, the reason a positive delta is associated with the down close is one, what I already told you. Nothing on your trading chart is going to accurately predict how price is going to move out into the future. And if you were trading this off the right edge, you would go long, but the candle's going to close to the downside. The other is this inherent flaw, and this is a unique inherent flaw, and that is it doesn't take into account the aggressiveness of the buyers or sellers. The aggressiveness of these sellers They are so sure that this currency pair is going to drop in value that they are willing to take a 2 pip, a 3 pip, maybe even a 4 pip hit in selling it just to get rid of it. So the fact that they're so aggressive, they overdrive the fact that there's an overabundance of buyers. So we have two things that we have to overcome in order to make this an accurate assessment. The first is we have to do the triple screen assessment. So we look at the delta of each candle on the two higher multiple charts. You already know what they are. I'm not going over it again. But in this particular case, we have to put those deltas into a 15-period simple moving average. Now that simple moving average factors out those occasional outliers. Now the market delta will not predict the direction that the candle will close less than two standard deviations worth of data. So less than 95% of the time, it will be wrong. But we have to factor that out. And by looking at the average of the last 15 market deltas, we create an assessment that's extremely powerful and accurate. So when both 15-period SMAs are sloping up, we know that the average of the last 15 market deltas are positive. Only big money can create that. We're looking at two 15-period SMAs. Our order flow line is going to be green. When both 15-period SMAs are sloping down, the bears are firmly in control, and we're only going to go short, and the line is red. When the 15-period SMAs are not in agreement, we're in control of the market. And that's when we don't want to trade, because we want to avoid losers like the plague. Now, here's exactly what you see. You're going to see these are the two down sloping order flow lines. These are the SMAs. Now, no matter what currency pair we're looking at here, you must trade short. And if you don't, you're going to really take it on the chin. Now, and here's the assessment. Now, I didn't put a time frame in here, nor did I put a currency pair, and I did that on purpose. Because this is a time frame independent, currency pair independent assessment. It doesn't matter whether you're trading, and I have examples: a 2-minute, a 5-minute, a 15-minute, a 1 hour, a daily bar. It doesn't matter. This is a force that drives price, and the currency pair you trade or the time frame you use is absolutely irrelevant. When this line turns green, we're going to take this first long pivot. And you see that here are the small retail traders top calling in both cases. We're going to stay long, and just like the big institutions are, we're going to run them over. Now remember, we can never take money from the big institutional traders. We have to ride their coattails. That's the way we make our money, or we avoid losers. The way we make money is by running over the other small retail traders. This is a real war, and we have to fight the tens of thousands of retail traders who are going to be trading in the counter trend direction and take their money. If at the end of the day our trading account is fattened, that's where the money comes from. It doesn't come from the big guys, it comes from the other small guys. Now the second force is Youre momentum. Now the Youre is an oscillator, and it's in that basket of oscillators that contain the relative strength, fast stochastic, slow stochastic, the Youre, Williams R, and probably a half a dozen more oscillators I can't even think of. But as an assessment, it does something that all the other oscillators do not do. It was not created to look for divergence. Now, we don't trade divergence. We don't care about divergence. We only care about the direction of momentum in the markets, and that's what the Youre was made to do. If you Google it and split open its formula, you'll see that it's a very complex formula, very different from all the other oscillators. And we have modified it. We have changed its gamma as a gamma factor, changed its smoothing factors, and its percent K line moves very, very differently than the percent K lines of all of the other oscillators. Now, I used to have a slide where I had 5 oscillators and then the Youre, and I took it out just to save a little bit of time. But let me tell you, it is very different. Now, what is momentum in the markets? I mean, I think a lot of people talk about it, but I think there's a lot of traders who have a little bit of a misunderstanding about what momentum is in the markets. And like I said, I want to make it academic. I want you to understand what momentum is. Now, if you have a car going around a racetrack at 150 miles an hour, its momentum is constant. If the driver hits the gas pedal and accelerates 10 miles per hour per minute, momentum rises. If he hits the brake and the car decelerates at 10 miles per hour per minute, then momentum falls. But in the markets, in every market, including the Forex, obviously, the momentum has nothing to do with speed. It has everything to do with selling pressure and buying pressure. So when momentum is falling, it's telling us that the close of the candle is approaching the low of the candle. And that's what we want. We want to trade short in an environment where there's sequential intensified selling pressure. And that's evidenced by the fact that the close of the candle is constantly approaching the low of the candle. When we go long, we want to trade in the direction of momentum so that the close is tightening further and further towards the high. Nothing will track momentum better than this. Now, again, we don't use the Youre on a trading chart. If we did, it'd be a no-no. It wouldn't work. We look at the momentum of each candle on the 2 higher multiples. And when both momentum lines, and those are just the percent K lines, are sloping up, the bulls are firmly in control, there's tremendous buying pressure in that market. When both momentum lines or percent K lines are sloping down, the bears are firmly in control, and it's tremendous selling pressure in the market. And when both momentum lines are not in agreement, we're in control and we stand aside. Now, occasionally there'll be a big move, but we don't care because we have to put FOMO in the garbage can. We cannot have fear of missing out. When everything aligns, we take a trade. Now here's just those percent K lines. I mean, nothing more elegant than that on the Youre, on the 2 higher multiples, and we have got to go long. If we don't go long, we're going again to get beaten up because we're trading against the direction of big money. And then finally, what I wanted to do is I wanted to put them together. Now you have momentum and now you have order flow. Now you have greater specificity. So on the first short pivot with 2 reds, you're going to go short. With on the first long pivot with dual greens, you're going to go long. And within each of these candles, you're going to have those wicks. Those are the sellers. Here you can see it sticking out through the bottom. There's wicks in every candle. We're running them over as we take this trade long and this trade short. Now the last is our quant line. It's our neural net, and it's sort of our paying homage to artificial intelligence and the fact that we know that no financial instrument moves in isolation to all the others. Now the example that I'm going to give you for understanding how the quant lines work, or our correlative market line works, is going to be off the E-mini. The reason I did not choose to show you a Forex quant is because our ability to get the correlative markets on all these Forex pairs is of tremendous work. And that's sort of proprietary information, which I just don't want to give out. Like if you trade the pound Kiwi, we know the 3 markets that correlate the tightest with that. And we leverage that to help us trade. But I simply just don't want to present that out to you. So I'm going to give you a market in which the neural net is very obvious, so you can understand the principle that we use, even though the example that I'm offering you is not coming from the Forex markets. Now, I did that on purpose. Now, here we're looking at the E-mini S&P 500. Now, here's the correlative market line red. Here's the correlative market line green. Trust me, when this line is red, this market's almost always going to drop. When this is green, this market's almost always going to rise. Now, it's the same thing with the currency pairs. Believe me, they're just as powerful. Only now I'm going to show you what we're really looking at. We're looking at the correlative markets. On the E-mini, it's the Dow, the Russell, and the NASDAQ. Now we're doing what's called a triple screen assessment of market structure. And it's a very complex assessment. If you come aboard, I'm going to do a master class. I'm going to show you how that assessment works. But when the Dow is down on a triple screen assessment, the Russell down, the NASDAQ down on a triple screen assessment, what's the likelihood of the E-mini going long? Well, you know, it's possible, but you're looking at a very, very small probability of losing this trade. When the triple screen is long on the Dow, Russell, and NASDAQ, you're almost always going long, or the E-mini is almost always going to rise. So these lines are very powerful, and they really tell us the direction of money flow. I mean, if the Dow's up, the Russell's up, and the NASDAQ's up, E-mini is almost always going to rise, because that set of correlative markets is showing that money is flowing into them. And I hope you understand why I didn't put up a currency pair. Did not want to show you the 3 correlative markets, because it took us forever on each currency pair to determine what has a correlation coefficient of 0.7 or greater, i.e., what other currency pairs are going to move in the same direction 70% of the time or greater, or in the counter trend direction 70% of the time or greater. We need tight correlations in order to create a powerful assessment. So we're going to combine them all. Now, here, if we don't have green, 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 and red, 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 that defines for us chop. And we're not going to trade. We're going to let the other small retail traders beat themselves over the head. I mean, some will make a couple of pennies, some will lose a couple of pennies. We're not even going near the market. When we're green, 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 we're going to go long. When we're red, 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 we're going to go short. And you see these small retail traders, they're taking a counter trend position. What are they doing? They're bottom calling. And who knows what they're using, and who cares what they're using? Fibonacci, divergence, it's irrelevant to us. The more of these we see, the better for us. And again, in every candle, there's up wicks, traders trying to go long, and they are not going to succeed as long as we've got triple reds here. Now, what I wanted to show you, and this is really the important part of the chart, is that small retail traders can create a retracement. Now, the reason this isn't labeled, again, for time frame and specific Forex market is because it's operational in all of them on any time frame. So I want you to get into that mindset. I don't want you to think about, any, the pound yen or any specific currency pair or a 2-minute or a 5-minute, because it does not matter. But the small retail trader can create a retracement. And what are they doing? They're trying to turn the market on their own. They're trying to push price back to mean, which in our case is our 50 EMA. Well, for us, let me tell you, this is a holiday because we're going to let them try the retracement and we're going to go short and run them all over. And this is a very lucrative move and a very powerful one because we've got a lot of retail traders caught in the wrong direction. Same thing here. We're going to take this trade all the way down and we're going to run over all the other small retail traders caught in the counter trend direction. Now, at some point, which I'll teach you in the master class, the market's going to get oversold. It has nothing to do with the oscillator. It has to do with some metrics that I'll discuss with you in the master class that have to do with standard deviations from the mean. That's what determines an overbought, oversold market. But we're going to take this trade all the way down and let these traders try to have their say, and they're just going to get busted out of the market. Once in a blue moon, they won't call a retracement, they'll call a reversal. Good for them. I mean, that's going to happen maybe 1 in 15 times. With these 3 lines red, they have no hope. Now, the C2 indicator is a very advanced indicator. And I'm telling you, when you use it, it's going to I'm telling you, it's going to surprise you. And I don't want to use the word shock you, but it is when you see it appear, and sometimes it's hard to predict when, it really I don't know, it like plugs the market into an electric socket at 20,000 volts. Now, what it is, this line is a combination of the sequential assessment of CHOP on a triple screen assessment. Every candle is given a CHOP value. Now, we've created sort of our own CHOP indicator because the one that's in the platform is pretty lousy. And we also use a variation of the Youre. So in this particular trade, when you see this red line, you know that as the trade matures to the downside, momentum is increasing and CHOP is decreasing. And that's a very powerful assessment. Now, you may not get this line that often on any individual currency pair. Maybe in a day you won't get it at all, depending upon how the market moves. Other days you may see it 5 times, but it's an extremely powerful assessment, and it augments everything else that we're looking at. It is relatively new to the platform. I'd say it's only 4 months old, maybe. And like I said, we're always looking to make the system more powerful. Now, it may constrain your trading a little bit. You may see a great entry that you want to take without the C2, but at least what it does the thing that is absolutely mandatory. It defines risk for you. You know, if you take a trade without the C2, you're accruing a little bit of additional risk on entry. That's all software can do. That's its only job, to defining risk for you. Now here's the C2 on the up. Now I try to only trade with the C2. Sometimes I'll take a trade without it if it's just really great. But I try to stick with it because it's a very powerful assessment. Now, the other thing, it's a complex platform and I'm only giving you about 80% of it, but we have to trade in the direction of the triple screen assessment. If we're going to be taking a currency pair long, we want it to be long on the triple screen. If we're going to take it short, we want it to be short on the triple screen. We want to do everything we can to avoid a loser. That's the goal of the software. And we have to take every independent assessment or independent variable we can, throw it in our favor, and make sure we have everything going for us on an entry so that we can sidestep losers. Now, here's when the background color is pink. And pink is the strongest alignment to the downside based on market structure. When you see pink background, I almost always trade with pink background because the market structural alignment on the two higher multiple charts is so powerful to the downside. This instrument is going to drift down. Now, I put this in here on purpose. You have three different powers of up. With green, strongest, blue, weakest, cyan, intermediate. In the master class, my last master class went 3.5 hours, and I had to call it because we went over so much material, and we took so many trade setups. But I will teach you the value of what these colors represent. Now, when this background is clear, we never trade. And taking a trade on a clear background, when the two higher multiple charts don't have an alignment in direction, is extremely risky. So on clear background, it's like sit on your hands and put your mouse under a pillow. Don't touch your mouse and don't trade. Now, the last is the revolutions triangles. Now, this took us 6 months to make. Now, this indicator looks at everything that I already told you, and some things I'm going to tell you in the master class, and gives you a perfect entry. Now, the system's not automated, and the entry that this provides you is a discretionary entry. But when you see that triangle, you are very likely going to get a terrific trade. Now, it's going to flash intra-candle, so you're going to have plenty of time to get in on this trade to the downside. And you can see that the 50 is heading down, the 15 is heading down, the 15 has crossed the 50. We have a lot of trading rules. I mean, that I haven't discussed with you yet in terms of how we leverage market structure. As weak and wimpy as Japanese candlestick patterns are in this day and age, that's how strong market structure is in this day and age. It tells us a lot about the condition of the market, and we respect it very much. Now, here is the up. I actually made the triangle bigger because you can in the indicators, there is a setting where you can make this 25 point, 50 point, whatever point you want. You can also change the offset. So it'll flash down here or flash tighter to the candle. I just happened to make that bigger so you could see it. And there's the move to the upside. It calls great trades. So it does a lot of the heavy lifting for you, but you may get some really good entries without it because it doesn't allow 1 pip of leeway. If it doesn't comport with every single, and I think there are about 80 to 85 different inputs, you're going to have access to all of them, and you can change them. And from time to time, we're going to recommend changes. But you're going to get this indicator with all those signals set at default at what we recommend is the best entry to take. So putting it all together, it's really easier than you think. It's harder to describe and to teach than it is to trade. Now you're going to get an exact entry. The exit price is really going to be determined by your automated trade management strategy. I mean, you have to make a decision as to how many pips you want on a move. I mean, that's part of it. We'll help you with that, and that has to do with your targets. I'll show you that. Now, here's a trade on the Aussie dollar. It's on a 2-minute, so that's a pivot. Didn't even discuss them, but you can't trade into an unbroken pivot, and this revolutions will not trigger if you don't get a pivot break. It does on the pivot break, and up you go. Now, where you take this is maximum excursion. You're not going to get all 15 pips, because I want to start our relationship off totally honestly. Its maximum excursion was 15 pips, but you have to decide on this market. If you, let's say you're going to take your lots off in two amounts. Do you want 6 pips, 7 pips, and your first 2 lots are out? Then maybe you're going to take your second 2 lots out on a trailer. That's totally up to you. So your profit targets and goals on the trade will help you define, but really have to do with your risk tolerance in the market that we're trading. Now, these pivots were not here when the trade evolved. They came in later. Now, here's the euro yen on a 2-minute, 17 pips. There's the entry. It's a perfect entry, and it's looking at things I haven't discussed with you yet. Now, this candle halo being blue is simply telling you this bottom line. Now, the first line is the correlative markets. The second line is Laguerre momentum, the multi-time frame assessment of the Laguerre. And the third line is order flow. Order flow is the twitchiest of the 3 assessments. So instead of having you looking down all the time to see what color it is, I just allowed us to halo our candle. You can halo it in any color you like, blue, green, polka dot, paisley, whatever you like, but you'll know that order flow is aligned to the upside. Now down here, I sort of lied to you a little bit when I said that we don't use anything off our trading chart. We do need Laguerre momentum on our trading chart, because we have to trade with momentum on the chart that we're trading. And look at this trade. Momentum is locked at the 100 line. Those are great trades. No other oscillator does this. Now, when you're locked at the 100 line, you know that there's tremendous buying pressure, that the Laguerre cannot even escape even a little bit down to the 80 line. It's terrific trade long. Here's the euro yen on a 2-minute, 16 pips. Same thing. The Laguerre is heading up. It locks, comes down a little bit, then it falls. But once you're in the trade, you let the C2, candle halo, you let all those things, market structure, carry your trade. No reason to exit. You're staying in the trade, and up we go. Now, here's our last 2-minute. There's the Revolutions entry. It's a perfect trade short. Pink background. Maximum excursion is 21 pips. Are you going to get all 21? Probably not. But there's no reason why you can't get a big chunk of the trade. But the most important thing is, what is the risk on entry of this trade going against you? There's slim and none. I'd say less than 10%. Now I switch to a 5-minute, and here's 22 pips on the Aussie dollar. Up we go. You see the same thing. Green, green, green. This trend line I have not even discussed. That's a masterclass discussion, because it is complex, and it's an assessment of volatility. It's got to be above the 15 for this to trigger. I'm telling you, we want everything in our favor to take a trade because we don't want to take losers. I don't care if we have to, if we miss out on 3 monster winners. If the entry was associated with risk, you don't want to take them. Because if you do, you're going to walk yourself into 1 ton of losers. And that's what most day traders and swing traders do. They get all these winners and then they walk into tons of losers and they give all the money back. Here's 68 pips on the pound New Zealand, on the pound Kiwi, on a 5-minute. There's your entry. Background's got to be green. Up we go. Maximum excursion. Now the Laguerre can sag on our trading chart. We're in, and there's no reason to leave this trade. Now this could have gone higher. I don't even know. I had to stop the chart here because I didn't want to make it too big. Here's 51 on the pound dollar on a 5-minute. There's your revolutions. There's your up. And this is flattening out. And once we're in the trade, we don't use the chart Laguerre. We look at the multi-time frame Laguerre and we look at the correlative markets. They're still stoking long. Money flow is still positive. We still have green. Market structure set up perfectly. That's the maximum actually the trade went on the chart. A very nice move. Now here's a 15-minute. And here's 32 pips on the euro pound. Same thing. Candle halo blue. So you know we have green down here. Look at the Laguerre on this move. It's locked long the whole move. When you see that, you know there's tremendous buying pressure. So it's all you need is an entry, and this trade is going to sail with green background, order flow with you. The Laguerre locked at 100. The multi-time frame Laguerre telling you that the 2 higher multiple Laguerres are also locked long, and the correlative market's green. Your chances of losing this trade are slim and none. Not zero, but slim. Here's 24 pips to the downside on the pound dollar. 47 pips on the dollar Canadian on a 15-minute. Now, it didn't go higher than a 15-minute, but you can take this you can trade an hour, 4-hour daily. It's absolutely irrelevant. This is not a time frame dependent type of analysis. It doesn't make any difference what type of candle you trade in terms of duration. You want to trade a daily to take a swing trade and hold overnight, it's no big deal. You're going to get fewer entries, but when you get the entry, you're going to be holding it for a few days. On stocks, I use this to trade options, and sometimes I'll hold an option for 6 weeks to 2 months, and I'll trade daily candles to get my entry. Now, I honestly believe this is the most powerful software and trading methodology available to the small retail trader. It's the only one that accurately tracks the direction of institutional money, and that is the only force that matters in the market. Everything else is dependent upon that big money and is driven by that big money. Now, here's the system. Now, we're offering 3 really special additions to the software. Now, we're only going to give them to the first 10 traders who come aboard. Now, I haven't given you a price. There's still things that you don't know about. But if you put cost aside for 1 second, if you have any interest, and you put your name, and I'm going to answer any questions that there are when I'm done. I mean, this is a live presentation. I'm sitting here on Friday afternoon. I'm sorry, on Monday afternoon, on President's Day. But if you put cost aside for a second and put your name and phone number, or your name and Skype if you're overseas, you will lock in those bonuses. And we have 175 people in the room. I guarantee you those first 10 will go fast. But if you put that in, you'll lock them in. Now, we're not telemarketers, so we don't call you. That's why I asked for this information, so that we'll only call you if you sort of invite us to call you. Rory will call you. He'll spend all of 5 minutes on the phone with you, or as much time as you want. He'll answer any questions you have. You have no obligation to come aboard whatsoever. And if you don't, your slot will go to somebody else. And honestly, we will still wish you the best of luck. So there's no, you're not obligating yourself to anything. Now, here is here's the add-on number 1. And this is going to help you trade like you have no idea. You can put in, now we put 1, 2, 3, 4, 5, 6, 7. We put in 9 pairs. But you can put in as many as you want, 12, 15, as many as you can handle. And I had Rory make this. You can put in as many time frames as you want, but the only thing you care about is the time frame you're trading. If you're trading a 2-minute, you watch the 2-minute. If you're trading a 5-minute, you watch the 5-minute. Now, when I trade, I only look at a 2 and a 5. I don't look at the hourly, the 4-hour, or the daily, because I'm not swing trading, I'm day trading. So if I see a 5-minute sell on the euro, I'm not even sure what pair that is. But if I see a sell on the euro, I'm seeing the same thing over and over again here. If I see a buy on the Aussie dollar on a 2-minute, which is likely the chart, I just have, I like the 2-minute a lot. And that may be the only time frame I watch. Maybe I'll put in the 5-minute. I just wanted to show you that it is infinitely configurable. It's going to give you the pip spread very accurately. 2 pips, 1 pip, 1 pip, 5 pips, 1 pip. You could put volume here too if you want to see how many lots are crossing per minute, and to give you an idea of how active the market is. You don't have to sit and wait for an entry. Now this is also configurable. You can use range, Ranko, tick, anything will go up here, does not matter. The second is the battle room. Now, the battle room you're going to be in for a year with me. Now, I think we have a battle room tomorrow. Now, we do a lot of work on stocks and options. Maybe you don't have much of an interest in stocks and options, but we also do futures and Forex. Right now, we're kind of doing a hard push because we have, a few hundred people in there, and they want to see how to get a great options trade. So you're going to have to put up with that education. But over the course of the year, we are going to hit Forex very, very heavy. And we are really going to go to town on that market. So you're going to be in there for 1 year. A lot of traders buy it as a standalone. Now, we were just ranked as one of the top 10 trading rooms. I want you to know, in the live trading room in the morning, I trade futures. And if you're one of the first 10, you're going to come aboard. But the reason that I think you're going to gain a lot from it is the trading methodology is exactly the same. What I look for is exactly the same. The entries that I take are exactly the same. So although I'm trading a different financial instrument, your learning curve is really going to skyrocket. And unless you are totally averse to trading futures, you may be able to add that on to your, in your repertoire of trading, in addition to the Forex, which obviously you've expressed a lot of interest in. I just want you to know, as an aside, I had a live Forex trading room for 6 months, but I just could not keep it up. And I'll tell you why in a little bit when I show you another slide. It was physically impossible for me to do, although we made really good money. So those are the 3 bonus add-ons you get. Now, I just want you to listen to a few testimonials. I clipped them so they're extremely short. And I'm going to skip the first one.
Software to confirm that the trade entry will work. Mark watches money flow, order flow, and momentum and stochastic that is done on multiple time frames, and it really works. I believe in what I've been taught. It works and has changed my life. One of the best months that I've ever had has been $51,000, and that's all been based on every.
And talking with Mark, the CEO of the company, just really helped me, because they're not out here to scam you or get your money. They're out here to develop educated, professional traders who can consistently make money. That is what they're about, and it has been a really great experience.
So this guy is seriously like a day trading genius. I've read a lot about other systems and heard about other systems that, are promised to make people a millionaire overnight. And Mark, always says, like, you're not going to become a millionaire overnight day trading. It's going to take a lot of years of practice, but you can make good money with, a low amount of hours and a lot of flexibility to where to live, where to work. So I started this about a year ago, and like I said, I worked an hour and a half, a few mornings a week, and I averaged about 75 grand last year, which is awesome.
I'm thrilled with the methods I've been taught and their amazing software. It's incredibly powerful, and I'm eventually going to ramp up to 10 lots. I don't have to worry about money for the rest of my life.
Needless to say, it's a great tool for pinpointing exit.
Okay, I'm going to cut him off. This last man is a member of the Miami Chamber of Commerce. What we just did was we sent out an email soliciting video testimonials from all our traders, and I just spliced together a few of them, and those are what I played for you. I don't want to do it again. Now, the software itself has to be projected on NinjaTrader 8. But if you're trading Thinkorswim, if you're trading Owanda, Interactive Brokers, eSignal, eTrade, and a whole bunch of other brokers, you can use it to power NinjaTrader. Now, my data feed is FXCM, and it powers my NinjaTrader great. What brokerage you use, it is really totally up to you. Rory, NinjaTrader has its own brokerage, right? NinjaTrader has a Forex broker, right?
Yeah, Forex.com.
Yeah, okay. Yeah, NinjaTrader does. I use Thinkorswim, and I've been with that platform for 23 years. So although you're going to have to take the signals off of NinjaTrader 8, you can power it for free if you have the right broker and platform, and you can trade off your broker or platform. If the worst case scenario is you don't have any of those, you can open up an account with Ninja for $100, and their data fee costs you $12 a month. So it's a pip and a half or so, and it's very inexpensive. Now, everyone gets the Rapid Results Quick Start Guide, and if you're really technically inclined, you can set this up yourself, only I don't think you're going to be able to, and Sergio will do a white glove installation and do the whole thing for you. If you run into an issue, he'll handle it for you. Now, I think it's a big deal, but our commitment here in the office to you is huge. Like, I'm available. I trade with you every morning. I don't disappear under a rock. I don't shove the software off at you and then, tell you I'm making millions of dollars. I trade with you every morning. Although you're going to be watching the futures market, you're going to see our success. You're going to see the same software working in the futures market and the exact same trade methodology. And that's going to really be of benefit to you. And I think it's going to really boost your confidence when you see us walk away with loot almost every day, trading the same trading methodology that you are. Rory's here, Sergio's here, I'm here. We have 2 more people in the office, which you won't talk to because they are not involved with trading. And we're here to back you up. I want to make you, honest to God, a successful trader. And I have an enormous number of those in my trading room. Now, I wanted to show you this picture. One, I wanted to give you a face behind the voice, and that is me. That's my son, and those are his 2 little buddies. And we just got out of Chinese buffet. And the reason I'm showing this slide is this. I'm a single dad, and I have no family in Miami. And I raised this boy totally by myself. I have 0 help. The guys that give you the most help with him are Sergio and Rory. Honestly, the guys I work with are my biggest help. I cook his food, I do his laundry, I make his bed. And what gives me the ability to do that is the fact that I've mastered this discipline. And this is the reason why I could not keep the Forex day trading room open. I had to get up at 2 a.m. Eastern time to run it. We would trade for about an hour and a half, have to go back to sleep. Then I'd have to take him to school. I'd get up at 6 o'clock in the morning. His alarm clock would never wake him up. I'd have to roll him out of bed onto the floor, throw water on him. Kidding. But get him to school, come back, go to sleep, then get up at 9 a.m. to trade the futures market. And after 6 months, I just couldn't do it anymore. I was like ready for a hospital bed. So I'm looking for a Forex trader, and I believe I have one. So in the near future, I'm hoping that we can open up a Forex trading room. But I don't want to mislead you. Right now, we do not have one. So I want you to understand that. But I'm talking with someone who's a great trader who is very interested in doing it. Now, I'm not going to really spend a lot of time summing this up because, that would be, I don't do it, but it's $997 per year. Now, if you're one of the first 10, you get the market scanner, a year in the battle room, a month in the live trading. And that big secret special bonus is the Trader's Aptitude Accelerator. It's an ebook I worked on. It's really good. It's not a throwaway ebook like a lot of the junk that you get. I spent a lot of time on it. I had it professionally done. It's 20 pages, and it's really got some good trading tips in there. And some of the things I recommend there, you will adopt, and everyone's going to get it, whether you come aboard or not. Now, just quickly, I would hang in there to the end. Ron Mel is hands down the best educational trading and software in the market. I'm trading for 13 years. I learn something new every day. Mark is outstanding in the live trading room. Norling, I paid tons of money. It was junk. I now trade Forex futures and options. I have to thank you, Mark Astor, a great coach. I owe my success to you with your mentorship software and trading room. Thanks to Leo for always getting my computer up and running, fixing any problems. And then finally, I've been using Line for 3 years, best software I've used. Mark continually works to improve the software to make anyone a successful trader, and we do. That C2 analysis and Revolution's entry are relatively new. Now, if you're one of the first 10, you're going to get the system for $997 lifetime. When we do an upgrade or an add-on, you get the upgrade and add-on for nothing. So you will never pay us another dime for the software. And I've had people in my live trading room for 9.5 years who have gotten about 175 updates and add-ons. We don't charge for them under certain circumstances. And this is going to be one of them where you have an opportunity to get in and never pay us for another penny. Along with that buying option, Again, you get the scanner, the battle room, and the 1 month in the live trading room. Again, just for full disclosure, and so you and I start off together, which you're not going to hear in other webinars. In 1 year, the battle room will turn over, and we will send you an email to let you know that your 1 year's expiring. It's up to you if you want to continue. After 1 month in the live trading room, it's going to roll over. You're going to be able to renew for half price, but that's up to you. So a year from now, you're going to get a recurring charge at a month if you want to stay in the trading. But the software is yours for life. And most webinars would just leave that out, and you would get an email later on. I want you to know that right up front, exactly what you're getting when you come aboard. So let me answer any questions that there are. Hang on. Tim, Steve, Rick, Maria, Jake. Thank you for your name and phone number. We've got a bunch of others too here. Let me just look really quickly. Wendy, Elaine, Allie, Helen, Lawrence. I mean, we've got more phone numbers than we have positions. But if you put your phone number in, you lock that in. So don't worry about that. So hang on, let me go through the questions. I'll answer them all. And remember, we're going to have a masterclass very shortly. We're going to do it this week to make sure that you all get up to speed on the entire program. I can't do it this Wednesday, but I think it's likely we'll do it this Thursday. Hey, how you doing, you Diane? What does the software run on? Yeah, it's NinjaTrader, Peter. I don't have audio now. You should, Kenneth, because everyone else does here. What masterclass are you referring to, Al? Ali, it's something that we schedule just for the group of people who come aboard in this group. We want to keep the amount small so that you have the ability. In this particular class, I keep the master class small. I keep the chat open. So as we go through stuff, you'll have the ability to answer questions. So there's nothing formal scheduled, but we'll probably do it on Thursday. And we're going to go, you'll notice there's a lot of things on, you look at the full software suite, there's a lot of things here I just haven't explained. And there's a lot of trading rules. And if I did, the webinar would be, an extra 45 minutes. I don't want to put you on information overload, but I do want you to see the power of the system and understand our core trading methodology and understand the indicators we use to make our assessment. There's still some trading rules that I haven't given you that's going to make your ability to trade easier and give you a better win percentage. And that's what we're going to go over in the master class. Yes, Vikas, it does. Hey, Norman. The quant line, Norman, is the first line. Second line is the multi-time frame Laguerre. Third line is the chart Laguerre. Now, we made it a little easier because you can see when it slopes below the 80 line, it turns orange. When it's sloping up, but not above the 80 line, it's lime green. When it moves above the 80 line, it goes to dark green. So it kind of saves you the trouble of having to look at the actual %K line on the chart Laguerre. But here's the thing. Let's say that you got an entry. You don't have a revolutions, but it's a gorgeous entry. You want to take it. but your chart gear is showing you that it's orange, but the line is pretty much flat. So you know that if you get one up candle after your entry, it's going to turn in your direction. It allows you that discretion. So it's really, I think, important to watch that line. It's really going to give you a better assessment of the trade. And when it's driving down like this, if we weren't in the trade, we would never take it. Is this going to be available as a record? Yes, there'll be a recording, Robert. Hey, Wazzle, thank you for your name and number. Appreciate. Elaine, thank you. Ali, thank you. Ali, just call Rory. He'll talk to you, okay? Helen, thank you. Lawrence, thank you. Stellian, I appreciate. Phil, thank you. Your United Kingdom, okay? Yes, the recording's going out. Swissy, you can trade, Al. Not a problem. I'm telling you. I don't have any slides, but absolutely. Now, I mean, if you want to trade the futures currencies on this, you can. You can trade the 6E, the 6C, the 6A, the 6B. They will work. Hey, David, thank you. Yeah, right now, okay, I already answered your question, Peter. Okay, Wazil. You have to talk to Rory about that, Wazil, because there are. Okay, take care, Phil. It is not on MetaTrader, Wazil. What you're going to have to do is we're probably going to have to set up a demo of Ninja for you. You're going to have to spend $100 to open up a NinjaTrader account, which will help you with. We have a preferred broker, and for $100 a month, for $12 a month, we will get your NinjaTrader up and running perfectly, and you can take your signals right on MetaTrader. A lot of traders do it, and I do it. I take my trades on Thinkorswim. What hours do you trade Forex? Helen, I don't, I want you to understand, I don't trade the Forex live anymore. I can't get up at 2 o'clock in the morning anymore. It's just impossible for me. I mean, with the kid I have to take to school and all the stuff that I have to do, it's just, if I didn't have him to drive to school, I think I could handle it. But that third, I can't wake up and go to bed 3 times. I tried it for 6 months, and I swear, I was almost going to be buying a cemetery plot. So I can't. But I do trade the futures live, and you're going to be in the room. And like I said, the system is identical. The methodology, identical. If you can trade and start to anticipate the entries I take, you will be able to trade the Forex markets really well. Hey, Humberto. Hey. Humberto, you have to just talk to Rory, Humberto. He will tell you. Hey, Peter, thank you for your name and number. There's not, Ali. There's not. And we have a reason for that. What is the difference between the trading room and the battle room? Okay, the trading room, John, is where I trade the markets live. I call out the trade. Now, remember, it's for educational and demonstration purposes only, but I call out the trades in advance. We have 500 people there, and the #1 goal of the trading room is, I call it trading successfully, but is to run up on an educational basis a significant amount of money. I try to do it every day, but I wind up doing it, I would say 8 to 10 out of every sessions. The battle room is pretty much totally educational. Now, each battle room is scheduled for 1 hour, and I swear on average, they go 3. I mean, at the end of a Tuesday, I'm hoarse. because in the morning I have the trading room. I always have something at 1 o'clock on Tuesdays, and then I have the battle room on Tuesdays, and then I have something at 4 on Tuesday. So this Tuesday's brutal, but that's it. It's education. And right now we're on the futures and options component, but it's constantly rotating. We just go around and around and around. We're gonna go to Forex. Everyone wants to learn it. Then we're gonna go to futures. I mean, basically you guys run it. You tell me what you want to learn. But once we start a topic, we do it thoroughly. And when we finish the topic, we move on. So that's the battle room. There's a tremendous amount of education there. Chat's open. So I see all the questions, and it's really pretty intense, and you're going to learn a lot. Thank you, Norman. Thanks for coming aboard. I am very new to Forex, never done it before. Do you have to have experience? You don't have to have experience before, Ali. You really don't. I'm going to teach you from nuts to bolts. In the first of all, the master class, we're going to do a lot of work on it, and if I have to do a second master class, I will. I want you guys and ladies to know how to trade and to trade successfully. So I mean, let me tell you, the truth is, in some regards, starting new is great because there's a lot of stuff you don't have to unlearn. No bad trading habits, and in a way, it's good. You forgot to put a Lamborghini on your webpage. Well, my Lamborghini, my my Maserati, and my they're out they're out in the shop right now. Actually, I have a Jeep Cherokee that's not doesn't have too much status. If you're not doing a Forex masterclass, how can we learn the software to use effectively for Forex? No, I am doing a Forex masterclass, Mark. Absolutely. I mean, it's just a matter of Rory and I sitting down and scheduling it. It is going to be done, and it's going to be done this week. And I think we're going to do it Thursday afternoon. I'm not going to give you the software without a lot of educational support. I want you to understand that. And I will do a master classes until all of you are thoroughly versed in the software. Hey, Louise, the software runs great on Awanda. That Thinkorswim, Awanda, Interactive Brokers, eSignal, and eTrade are the best platforms. The API on Awanda is terrific, and it will power NinjaTrader a great. Lewis, you got a 5-star platform. How long is Rory going to be here today? Mark, he's going to be here at least till 6 o'clock today. Plenty of time to give him a call. Thank you for your number, Afzal. Sure, Mark, you give him a call and he will set you up. You got him. We'll make sure you get him for sure. Anything besides NinjaTrader? I have Forex accounts on other brokers. No, unfortunately, this only projects. We had it work. We had a perfect system on Sierra, but it's so complex. And honest to God, Wessel, we are upgrading it so often. It's very hard to manage on a second program. Now we do have it on Thinkorswim. We do have a Thinkorswim version. But for Forex, I would recommend the NinjaTrader version. But it's the Thinkorswim version is very good. I didn't even discuss it, but we have a TOS version. And I have traders sending me emails that they're converting to the TOS platform because they like it better. So it's just my own. No, you're going to get it. So it's just my own opinion. You're going to get a recording, William. Hey, Albert, how effective is the system using a 30-minute or hourly chart? Albert, just as effective as if you're using a 2 or a 5. Honestly, it is time frame independent. I want you to know that I have an options alert newsletter that is not really a part of this offer, nor I have any intention of discussing it. The only reason I'm going to bring it up is because I use the system to configure my options or to get my options entries. And I have some options that are 3, 4, 5 months out. I use daily candles. And in 2020, I closed with 32 straight winning options trades. Now, there's traders in this room that get that options alert newsletter. And tonight, I am sending out 4 trades, which you may think is excessive in this market. I'm a little scared about it, but they are just stellar entries, and I just can't pass them up. We're going to have 20 open positions in the options portfolio, all based off of this system. And most of those positions are really deeply in the green. Hey, Phil. You're great, Paul. Ninja Trader for Forex is perfect. Hey, you Diane, he writes, the battle room runs so long because secretly Mark loves us so much and I loves to talk. You're right. You know what, you Diane, I do love to teach. I really do. And you guys in the battle room are such great students, really. And you ask me terrific questions. So that's why they run on. I mean, that was my first calling. And you know the funny thing, the only reason I ever left my position as a professor was because of my son. There needed to be somebody to take care of him. He was a Miami-born kid, and I had to come down here. To take care of him. Hey, thank you. Yes, Michael, but you're going to have to call Rory to set it up for you, Michael. Okay? You do, and we'll do it for you. Hey, John, why did you spend the entire webinar on Forex? Why don't you show us trading futures? Because, John, it's really simple. Is because this webinar was about Forex. That's all, John. You can ultimately, like I said, the system really can be geared to trade anything. So it's not that I just wanted to pigeonhole one thing. That's all. Not a problem. No, call, Michael. S. Call. The trading room, John. You know what? Let me tell you something. On our best days, the trading room, we trade for 10 minutes, make our profit target. Our profit target is 400 to 600 a day. So we're looking to make 1,500 a week on just 2 contracts. That's 6,000 a month. That's almost 70,000 a year in educational dollars on 2 contracts. I never close it in less than an hour because if we finish trading, sometimes in 5 minutes, I spend an hour teaching. Jim, I'm creating a cheat sheet for the system. Everyone's asking for it, and I'm going to work on it. I'm going to get a PDF out. Okay? Can Ninja run on MT4 Forex data? I don't think so, Tony. That's the problem, is that MT4 is not, you know, and let me tell you, every webinar, I have people from MT4. A lot of people like that platform. We're looking at MT4 as a potential move over, but it isn't going to happen in the near future. So what you're going to have to do is open up an account with NinjaTrader for $100 and take your signals on MetaTrader 4. What time do you open the trading room? Do you trade? I don't trade extended hours. Hang on. Listen, I trade till we hit our profit target. Hopefully it's going to be quick. If it's painful, I'll trade longer. I'll trade 2 or 3 hours. Sometimes I've even closed for lunch and then traded the afternoon. I want to get out of that room with money, but I like to get out on very few trades. I open the trading room, John. Actually, Rory opens it about 8:30, 8:45, but I don't start trading till about 25 after 9. I want to trade the market, not pre-market. Hey, George. Hey, listen, great to have you in that FX class, George. Really. Hey, Wazil. Well, listen, you can still trade with it. I know a lot of people like MT4. I have to tell you, Wazil. And I'm telling you, nobody asks me anymore about Sierra. Nobody asks me about TradeStation. It's always MT4. We're going to look to move over. It's going to take us 6 months, though, to take this program to MT4 because it's so complicated. So you're going to have, the only way to do it right now is you're going to still trade MT4, but you're going to take the signals off of NinjaTrader. And it's going to cost you almost nothing to do that. And listen, I agree. Look, you know, people speak, and every webinar that I do, I always get MT4 people in it every time. But a lot of them come aboard on that system. Yeah, I know, John. It's a very, very, everybody likes the platform. Hey, Wazil. The problem with attending these rooms is that we still, what about, okay, if you have a real job, Wazil, and you can't attend the live trading room sessions, it's not a big deal because you're still going to be in the battle room. You're still going to get every day. A link is available to the live trading room session. So if you want to watch the trading, you can watch it. I mean, I don't hide anything I do. At the end of every session, I show every trade. I show the profit loss on every trade. And there's a link available to the room. So you can basically get a tremendous amount of information just from watching. And also, if I'm talking and it's not relevant to you, you can scroll through it. But you can see all the trades, see the methodology, hear me call them live. So it's sort of a, you know, it's a secondhand way of doing it. But every session we have is always recorded. We're going to go to webinar. Automatically, it records the session as soon as the room is open. Doesn't stop recording until the room closes. So I thank you so much. Hang on 1 second. Okay, I just talked to Rory. We've got 6 sold, so we've got 4 left. If you put your name and number in, you have no sweat. We'll eventually get around to calling you. If not, if you're considering it, you may want to add it. And again, it's at no risk to you. I really appreciate your time this afternoon. You're going to get this on a link, and you know, for replay. A few people asked me for some special considerations, and I will give them to them. I mean, you'll see if you work with me that I really have a vested personal interest in making you successful, and it's just because I care. And I really do care about my traders. Listen, and this is the way I'm going to close this. We're a small trading family, and that's what we are. We support each other. We help each other. We give each other suggestions because we're up against tens of thousands of other small retail traders. And here we are, like, you know, like we're like an electron orbiting around this gigantic molecule of retail traders. And there's absolutely no reason why we can't beat these other retail traders up consistently for profit. And I really do care. So have a really, really wonderful day. Hey, thank you, Salvador. It's great to have you. So you have a great afternoon, everyone. Enjoy the day. You know, we're working, but it's a little bit more mild because the market's closed. Hope to see you on Tuesday morning, and let's knock it out. So take care and have a great, great afternoon. And again, thank you for your time. Bye-bye.